Hi, folks. Lee Gettess here with the Market Sense for the week of September 3rd, 2013. The charts we're going to look at come from the Trade Navigator software, and boy, we've got a tough week this week. First of all, we've got Monday on Tuesday, although the action was enough to fill up a couple days, I think. We had bonds drop off substantially because of, I guess, fear subsiding about an attack on Syria being imminent. They dropped down right down here to this lower moving average. The lower moving average actually is 129.09 and the low is 11. So, yeah, close enough. But anyway, they seem to get down to that level and then bounce from there. Bounced almost a full point intraday. I think the move was overdone. I think the bounce might have been overdone also. And I'm not sure if that support holds, then they could possibly be back up here to 132.04, which is the upper moving average. And I've still kind of been expecting that it somehow out of this pattern they were going to get back to the mid-Keltner channel, which is now up above 135, about 135.08 this week. That may not be the case, though, because after this big trend down, this base is still kind of sloping lower. That's not a real positive sign, although our momentum indicator down here suggests that there's a little more time spent above its moving average than below. That would suggest there's maybe some accumulation going on in here. But let's see if they can get up to 132.04 and hold this 129.09 level. The fact that they're moving so much on Syria makes no sense to me. I think whatever they do on Syria is short term, and they'll go back to paying attention to what's really wrong in the economy. Stocks, of course, had sort of a similar situation, only in the opposite direction. They opened substantially higher because of the lack of fear, but they only held that high up there for about a half hour and then broke all the way back down to where they were on Friday and then had a little bounce in the last hour. They've got support way down here at 1615. Resistance could be up around 1653. That's makes the most sense because it's kind of close, but they could go all the way up to 1675 without too much trouble. We have a rather unusual week here because of the 4-day week. First of all, Tuesday's price activity makes it pretty difficult to figure out what happened Wednesday. And then they've got all of the various employment reports. The Challenger job cuts, ADP, the weekly employment, and the monthly employment report are all jammed into the last 2 days of this week. So certainly that's less than an optimum trading environment for anything. Good thing the U.S. Open is on. I hope the tennis matches are interesting because that's about what we're going to be paying attention to this week. So that's what we've got for you today. I hope you can find something profitable to get yourself into until football starts on the weekend. Thanks for checking in to see what we think.